In this video, let's have a look at the third sum from Standard 11 Samacheer textbook, chapter Final Accounts 1. So the sum goes as from the following details for the year end 31st March 2018, prepare a trading account. So they've given items relating to trading accounts. So we have to sort it out into debit and credit and then get the gross profit for the sum. So here I've written out the format of the trading account of the name is not given, so I give it out in dots. So for the year ended 31st March 2018. So first I'm going to start off with writing the 4 basic items, that is 2 on the debit and 2 on the credit. So the 4 items relating to the debit and credit side of the trading account is being written down. So the first item I'm just going to fill it in. So first to opening stock I've written here. Opening stock for this sum is 2,500. Next I have purchases. So purchases given in the sum is 27,000. Here instead of purchase return, I've written out another name which is used for purchase return, that is return outwards. Why in the sense outwards? Because when we purchase something and it is defective, we are going to return it out back to the particular seller. Therefore, goods are going out. So returning outwards will be the purchase return. So that's going to be 5,200. Next, to fill it up on the credit side, I have sales. So sales for this sum is 40,000. And the other name for sales return is return inwards. That is when we sell something and it is defective of nature, then the particular person who has bought it from us will return it back to us. Therefore, goods are coming in. Therefore, it is return inwards. Therefore, we are going to 7,000. We are going to subtract it from the sales. Next, lastly, I have closing stock, which is 5,200. So apart from this, the items given over there and the items which has to be recorded over here is going to be the direct expenses. So 90% of the sum is going to be on the debit side of the trading account. So here if you see, the first direct expense is your wages. So wages is 2,500, outer column. Next direct expense given here is coal and gas. So 2 coal and gas. All this is happening on the debit side of the trading account. So coal and gas 3,300. Next we have carriage inwards. 2 carriage inwards. So this also is a direct expense. That is 2,600. So 3 items we have recorded. Apart from the 4 basic, we have recorded 3 items on the debit side of the trading account. So after this, we are just going to tally both the sides. That is, get the balance of both the sides and then see which side is the least, and that side is going to be the gross profit. The gross profit is going to come on the least side and get the grand total, of course. So when we subtract the purchases and purchase returns, we get a total of 21,800. Likewise, when we go to the sales side, when we subtract the return inwards from the sales, you get a total of 33,000. So apart from the sales and the sales return, and on the debit side purchase and purchase return, the other items are going to come in the outer column, right? So next step, we have recorded everything. We have done the calculation for purchase and sales, and we've got the net sales and the net purchases. So now we're going to take a pencil and total up the debit side and the credit side. So on the debit side, we get a total of 32,700, and on the credit side, we get a total of 38,200. So obvious 38,200 is going to be the grand total because that is the greatest total on both the sides, which is going to be written. Next, we have to come to the debit side, which has the least total. So the debit side is going to have the gross profit. We're going to record the gross profit on the debit side, which is going to be transferred to the profit and loss account. So here 38,200 minus 32,700, which is the total of the debit side items, we get an answer of 5,500.